Welcome to everyone on this session on ESG and financial stewardship. Quick introduction to the two esteemed panelists we have for this session today. So we have Kaustubh. Kaustubh is co-founder of Pyse. Pyse is a platform that promotes sustainability through investments from both institutional as well as retail investors. We also have Rohit Shimpi on the call. Rohit is fund manager at SBI Mutual Funds. So we'll start with a general overview of the market. So Kaustubh, if you can start, my first question is to you. What are the trends that you're seeing in the overall business environment, specifically with reference to ESG and financial stewardship?
First of all, thanks a lot for having us on board. Exciting list of speakers, and I think it's amazing to be on a panel with Rohit over here. Great question. I think good starter. Interestingly, I think in the last 2 years have been, very interesting. In terms of how corporates, both large and small, have looked at decisions driven by social responsibilities. While a few years back, taking such responsible decisions was driven by just the need to do good. It's very evident now, especially in the current economic climate, that these decisions actually help an organization in becoming operationally efficient, save costs, and scale much faster than they would have, if they hadn't looked at ESG as a purpose-driven thing in their business, both now and in the long run. The most interesting trend that I've noticed, is the different ways in which capital is being flowing through for companies, especially helping them with the E part of the ESG, the environmental side of things. I think accessible and more intelligent financing options have actually helped corporates transition to a greener business, without having them to spend any money, even a single rupee, or even compromise on their business efficiency. Just look at the number of B2B electric vehicle fleets that are currently running in the country, be it Zomato, Swiggy, Dunzo. It's just crazy how money has actually helped accelerate electric vehicle adoption today. On the S side of things, which is the whole social angle of it, breaking boundaries in inclusion especially, has only widened the scale of problem that's being solved today. And helping in further adoption in general. But the fact that corporates of all sizes are looking at roles like ESG heads, sustainability officers, very early, shows how organizations that care to stay in the market for long cannot really ignore talent that can help them focus on ESG. In fact, ESG in general has become another core pillar to a business function, just like sales, marketing, or even tech. For that matter. And unlike many years back where ESG and CSR were synonymous, ESG efforts are now more an investment for a company, like all other verticals, that yield a phenomenal return in the long run.
Thank you. Rohit, you want to give your thoughts on this?
Sure. Thanks, Vibhor. Thanks for inviting us again. So I'd say, in general, we are seeing a much greater awareness of ESG from both investors and corporate issuers over the last decade, really. So it's already like a huge theme globally with, almost 1/3 of AUM in sustainable products. And, we are seeing it both from on the investor side, whether it's the large asset owners, institutional ones like global pension funds, or, even younger, more conscious investors. And asset managers as well, getting more kind of aware of ESG risks to their investments, or a desire to have a positive impact, or both. Admittedly, over the last few months, news flow has not been very great on the ESG space. Essentially, there's been quite a bit of criticism around greenwashing. We've certainly seen certain regulatory interventions on that front. There's also been criticism over the last few months, about exclusion of certain industries from investment portfolios. So most notably, think about fossil fuels or defense. Now, we don't really have at this point concrete answers to some of these difficult questions, but at least the debate is out there, right? So if investors and corporates are thinking about it, it will likely lead to greater introspection in the wider ESG impacted community. And this is maybe part of the process leading up to maturity, and over time could lead to better overall outcomes for investors as well as the community at large. When you come to stewardship, really, this is at its most basic, just institutional investors really being responsible owners by monitoring their investee companies and generating long-term returns for shareholders. And I think the sweet spot really is when you think of maximizing long-term financial returns at a risk-adjusted level. So the key to that, both of those aspects are that you don't want really investee companies to be forced into taking short-term calls on ESG just because there are very specific targets or just for some quick financial incentive out there. And that's the same with stewardship. Absolutely, you want the companies ready to think long term. And for someone like, say, a large institutional manager or a large institutional asset owner or a manager, we are really permanent investors in the companies that we are invested in, right? So there's a much more responsibility on that side. And of course, the on stewardship itself, there's been so much of greater disclosure and transparency by asset managers over the last few years, both globally and the small steps being taken in India too. And one nice aspect we see is that there are more experienced and senior professionals being appointed by asset managers and asset owners for ESG and stewardship.
Sure. So you mentioned that there's some measures being taken in the domestic market as well, which is heartening, because I was looking at some numbers on fixed income assets, right, which have been generated. Now globally, outstanding asset volumes, have touched almost $2.8 trillion. Whereas if you look at total cumulative issuances that have happened in India, size is just $20 billion, which is less than 1% of the global market share. So Kaustubh, maybe, specifically in Indian context, where do the companies stand in terms of, responsible investing, ESG and, sustainability? So if you can share your views as well.
Right. So if you were to look at this like a hockey stick curve, right, I think we're right at the point of positive inflection. If you talk about India in general, right? While we might be a few years behind some of the developed nations, I think we've actually identified the importance of being socially and environmentally responsible a lot earlier than others have. Right, the titans of the industry in India, right, the torch are usually torchbearers for almost any kind of business adoption of change adoption that comes in and business practices, right. The same goes with ESG as well. I think your Tatas, your Adanis, the Birlas, all have capital deployed here to set an example of sorts. Right? It will obviously take some time for it to percolate down into the DNA of some of the early stage organizations. But I think what's beautiful about India is that we as consumers are also driven by passionate and responsible consumerism. Right? And I think, I believe there'll be a huge driver from the consumers of products, right, towards companies trying to adopt ESG practices. It helped with the whole Make in India movement initially, the whole Atmanirbhar Bharat side of things, right? And now with climate conscious businesses and the fact that businesses would like to actually go and promote that they're climate conscious. Okay? I keep using this example a lot, right? If someone as big as a Zomato makes use of 70% of their screen real estate to show that they're climate conscious in their delivery, you can really understand the amount of value they believe their customers give them for being such responsible businesses. Absolutely. Right? We have to acknowledge, however, like Rohit rightly mentioned, that there is still a lot of work that needs to be done, in terms of where we need to be. It makes no sense to stay oblivious of the gap that exists. But honestly speaking, I am a little bullish on this. So the paths that we are taking and the end destination where we're heading to is definitely right. And great for both the people and the profit, right? That's how it works. Because interestingly enough, anything that's good for the planet is logically good for the people and profits.
Thank you. So valid point. Rohit, your inputs. So fund houses like you, obviously the focus is more on evaluating business model and corporate governance practices. But do you think there is merit in prioritizing, and giving more weight to sustainable investments as a priority when you make your investment decisions?
Yeah, sure. So, when it comes to the way that, let's say, the Indian mutual fund industry has been, evolving in this aspect, right? I think so. Firstly, I think SBI Funds was really one of the pioneers in ESG investing in the Indian market. So, we started kind of more than a decade ago. And it started with a small thought. Basically, we were thinking about certain aspects like, major global and Indian well-publicized corporate governance failures. Even matters such as underpricing of natural resources. In the inputs which corporates use. And that was really for us. We were thinking about ESG before we knew it was ESG. Essentially, before it kind of became mainstream. At the same time, there were regulatory changes. Essentially, the regulatory environment pushed mutual funds to take proxy voting much more seriously and disclose these aspects as well. So we actually right from 2011 incorporated a detailed ESG checklist into our initiating coverage reports for any new stocks. And at that time, we really didn't have a separate ESG team. That came on board only in late 2018, early 2019, when we started getting dedicated ESG analysts on board. So, this from 2011, it got our analysts to think much deeper about these aspects, which otherwise they would have ignored. And, over time, the process evolved. We worked with internal resources, with external vendors as well. And we've kind of improved our knowledge of ESG over the period. Finally, in 2016, we launched a product on the PMS platform with the ESG theme. And in 2018, we converted one of our flagship equity funds into what is today the Magnum ESG Fund, right? So, we from the time we hired these new analysts, I think in early 2019, that's where I think that then we kind of decided to take our knowledge, of ESG and our expertise to the next level. And for us, really, it's the not just for the ESG fund, but for the fund house as a whole. The ESG is an important part of the equity process. We are starting to make some inroads into the fixed income space as well, and we've made public commitments on that front as well. But really, what the combination of ESG and traditional fundamental analysis gives to a portfolio manager is, it's really a superior input, right? At the end of the day, both of these are great advisory inputs for any portfolio manager to have in there. And, we've, of course, had a lot of good fortune to be part of the Amundi network, which has also helped us to, in our ESG journey as well.
Yeah, so I was reading some research which Fidelity had done, and they had shown that companies which score well on ESG parameters, they perform much better post-pandemic in terms of stock price correction as well. So yes, I mean definitely, I think your inputs are bang on. And you mentioned also that proxy voting rights. I think that's a very effective tool that investors have to drive, especially financial stewardship and ensuring monitoring the portfolio of investee companies that you have. I wanted to also check with you, how do you measure the impact and the performance post the initial investment? So if you could also shed some light on that.
Yeah, sure. So, what we do is really in terms of, say, our process, right? So we do work with external providers as well. And there is an aspect of screening which works in our ESG fund, where, the worst rated companies on the external providers framework, or the ones that have the highest controversy scores, are expressly excluded from the ESG fund. But you would appreciate that not all the companies would be rated, right? So we do use internal scores as well, for that purpose. Over time, we think it's changing. It's likely over the next few months that the rating providers actually cover more and more companies. So I know one ratings provider has gone on record saying that they now cover over 90% of assets owned by Indian mutual funds. Right, so I think there's going to be much more transparency kind of coming in. There's going to be much more research coming into the market as a whole. Our strategy really is focused on this just for the ESG fund. That's why we have this exclusionary approach for certain industries and certain companies which are rated very poorly or have high controversy scores. But as a house, the overall responsible investment strategy, right, is focused on integration, which includes engagement, voting, stewardship as well, and of course market transformation activities where we would engage with various other participants in the ecosystem. And I just want to spend a few seconds on our internal framework, right? Because this is something that we're really proud of, having run it for over a decade now. So we essentially build in about 50 parameters, and it's a detailed questionnaire which the ESG and fundamental analysts kind of fill in based on the firm's disclosures on all three: environment, social, and governance initiatives. And then we kind of create this internal score based on a score of 1 to 100. And just in terms of, say, the sources which we are able to access right now, so it's of course the more traditional, annual reports, company websites, the old BRRs, now the BRSRs. But I'm actually quite proud to say that some of the efforts of the team have gone a long way into using unusual data sources as well. So I know a few company reports we've looked at, for example, academic studies on a particular company's operations. So I think there's a fair degree of diversity in the sources that we use. At this point, in terms of, say, measuring specific outcomes, as your question alluded to, I think it's still very early days because the data availability itself. So we now have very few BRSRs, right? It's just optional for this year, and companies have just started disclosing that kind of detail. But I think as we get into this process, FY23 will have the top 1,000 companies reporting. I think post that there is something which we can kind of work harder on. I think over the next few months you might see more disclosures from mutual funds, at least talking about, let's say, weighted average scores of their portfolio constituents, etc. Maybe maybe slightly similar to how credit rating information is disclosed on fund fact sheets.
Oh, that's very interesting. Kaustubh, my next question is to you. If you can just tell us a little bit about Pyse, how what does your platform do? How does it promote sustainable investments? And what are the themes and sectors that you're focusing on?
Right. So Vibhor, I think one of the biggest problems that we identified around the time that we conceptualized Pyse, right, was as a country, we acknowledged the effects and existence of climate change as a pressing issue. Right, there was always very high climate awareness, right, but people never found a way to take a jump from the state of climate awareness to climate action. Right, there was essentially no tool that was available for them to be able to do that or participate in any way as individuals. In fact, for everyone, climate action was done through products that were either philanthropic or required you to adopt some kind of technology, or that was expensive, like an electric vehicle or solar, for example, or a lifestyle that led you to compromise something or the other. Right. Now, what we realized internally was, for a climate action product to really work for the masses, people needed a factor of motivation beyond just the feel-good aspect of it. Right. So while philanthropy and donations are a great first step for you to take the charge, they're not necessarily scalable and replicable in the long run. Right. Same thing goes with adoption, for that matter. In an economic climate like we are in today, you can't really expect a middle class Indian to put their money behind expensive technology only because it's sustainable and good for the environment, right? Be it electric vehicles or solar, like I mentioned previously. The general idea is that people here in India, they want to do good, but it's expensive and sometimes filled with compromises to their lifestyle. Right, and that's where the Pyse idea actually came into picture. So the idea of Pyse is essentially to create a platform for people to do good in a reasonable way and a profitable way, right? A place for them to contribute to climate action individually through finance as a tool, right? And make sustainability accessible and profitable for everyone. Now, HNIs in this country have looked at green assets, right? Anything from afforestation to renewable energy, electric mobility, energy efficiency, right? All of them as instruments first, investment instruments first, right? And then the feel good aspect of it. For close to 10 to 15 years, the renewable energy industry has been thriving with HNIs trying to come in and invest in these projects, or even sovereign funds for that matter, outside of the country. Right, renewable energy has been a popular investment product amongst many of these large ticket institutional portfolios. So have electric vehicles, right? So we basically took a model that worked great over there, right, and democratized it. We let people offset their carbon footprint by investing in clean and green projects directly, and make returns that would essentially help their portfolio outperform inflation. Right, and our entry barriers are so low, we allow people to come in and invest with a ticket size as small as 5,000 rupees. So what's beautiful about this entire process and the product is that when you have investors like these who are willing to finance projects, you get the opportunity to be creative, right, with your financial engineering, and let corporates, right, typically all of these AAA clients that we already work with, to transition to a greener business through an OPEX-like model, right, where retail investors own the assets and charge these corporates a fixed fee on a monthly basis. Right. Today, we manage close to about 10 AAA rated clients, people ranging all the way from Tata Communications down to DMart and ID Fresh, right, who are consuming power through projects that have been financed through more than 4,000 retail investors on our platform today. Okay. That's actually allowed for these corporates to transition to renewable energy with zero upfront cost, right, and an immediate savings in electricity, because renewable energy power is almost 50% cheaper than the traditional grid power that you end up consuming. And the same thing goes with startups that we are financing and working with, who are looking at electric vehicles as an interesting strategy for their entire supply chain. Right, we've worked with startups that are looking to transition from petrol vehicles to EVs, with again zero money put in through those corporates, but immediate savings in the kind of operational expenses that they have, because the fuel prices aren't going low anytime soon, right? But EVs are significantly cheaper to operate. So essentially through Pyse, the idea is to leverage the best quality of green assets, right? That is how cheap they are to really operate them, and take away the whole idea of saying, hey, listen, you know what, it's expensive to really transition, be it renewable energy or electric vehicles. It's essentially a conduit, I'd say, for retail investors, people like you and me, right, to go green through investments, and an interesting zero upfront cost model for corporates to transition to something green, make sustainability a default choice for everyone. So we haven't really looked at sector specific thing. The idea is that anyone and anybody looking to transition to green is an opportunity for us to really create an impact, right? So we've done people all the way from data centers to communication companies down to manufacturing, FMCG. We've done even logistics, right? We work with all cargo. But we're sector agnostic, and the idea is to provide capital to help them transition and make that process much easier.
Okay. No, that's good to know, because I think a lot of ESG investments, the money is going to the clean energy sector, But beyond that, there's limited flow of credit. So, good to know that, your sort of investments are much more diversified, and, you're helping entities in other sectors as well. Kaustubh, Rohit, I'll come back to you. So, if you can just, I think, and you mentioned this a little bit earlier as well, which is that there are concerns around greenwashing, inaccurate reporting, measurements possibly. So how do you think, one can safeguard against some of these issues which are there in ESG investing?
Yeah, sure. Thanks. So I think, this is seriously one of those opportunities for both corporates and investors to kind of show that they are the best in that field, right? In the sense that because there is, so much of concern around this aspect, that it gives an investor or a corporate an opportunity to really separate themselves. From perspective of an asset manager like us, we need to basically, roll up our sleeves, get in deep into ESG analysis of, individual companies. And we really believe that deep, fundamental bottom-up ESG research is the best way to, guard against the greenwashing. This will mean that we might have to, go deeper in terms of our work. Maybe the starting point is external ratings. You'll need to compare that yourself across data from different players in different industries. Maybe it means that when your fundamental analysts visit the ground and sites of those corporates, that you're going to ask people down the line whether they are kind of tied into those same ESG goals of the organization, and that will give you a lot of clarity there. I would like to also address it for investors in asset management products, right? So let's say if you are invested in an ESG mutual fund or a fund house that talks a lot about ESG, you all need to understand as an investor the process of the house better. Maybe from the public sources that you have, you should look at the house's responsible investment policy. You can now look at the stewardship report as well. There's much more disclosures which SEBI has forced AMCs to make from 1st April. So some of those are as simple as going through the scheme SID or the information document. Finally, you should go through also the fund and its holdings as well. Maybe even it could be as simple as checking whether the house has enough personnel who dedicatedly work, on ESG. At the same time, you must, as an investor in these funds, look at greenwashing allegations in the context, of local needs. So, the most famous example is of whether India can really get off fossil fuels, completely. And that's, the stated one is that you need a combination of fossil fuels and, renewable energy, simply because, say, the environmental goal might be at odds with the social goal of providing energy access to all. So I think there will be some aspects like this, particularly on defense. In recent times, fossil fuels has always been a contentious one. That there may not be consensus really on some of these issues just yet. There will be some judgment involved in spotting greenwashing. And one anecdote which I like to quote is a few years ago. I visited, a mid-cap company's single site, right? And despite some of the claims made on ESG by the corporate head office, on the ground, when I asked the site manager, what ESG initiatives have you taken, he was not aware of any, and he said, maybe that's something someone in the head office looks at. But I'm proud to say that same corporate in 2022. They've got data from that very site, on renewable energy, on water usage, etc. On their website, on the corporate website. So while I could not go and visit that site again due to the COVID period, but I'm sure that very manager must have provided that data and is now thinking deeper about ESG. Right?
Thank you. I think we're running out of time. I'll maybe just give a minute each to both of you to give any concluding remarks, anything that you would like to emphasize, your thoughts on, how this market will grow very, very quickly. Maybe we'll start with Kaustubh first.
Oh yeah, absolutely. I think it's the right time, right? I think an economic climate like this gives it all the more reason for people to transition to something green and clean and really restructure the way that you're working, right? And Vibhor, like you mentioned, the companies that have been ranking very well on the ESG indexes are the ones that have come out successfully out of the COVID entire pandemic situation, right? Because they are leaner, they are more, I'd say, mission focused, right? And really look at it more on the long term and on the short term as well. Right, and more and more ways in which capital can be driven towards these responsible businesses, either to transition to it, especially the transitionary period, right, which is what all the support is needed for. And we get more retail participation coming in. I think this it's just a matter of time till it becomes less of a buzzword and more of a common business term of sorts.
Well summarized. Rohit, your final thoughts?
I just wanted to add, that there's, according to us, no one size fits all for ESG, right? There are likely many paths to success. And importantly, those paths may change over time. Some of the opinions that, are very commonly accepted as ESG truths today may change, over time. The case in point being what we've seen in the current year with certain funds wanting to do fossil fuels once again, certain nations also deciding to go down that path again. So I think as investment professionals, and investors as well, we need to keep an open mind. At the same time, be guarded against greenwashing claims. And I think ESG is kind of it's maturing. It's reaching some of those tough questions which need to be answered by the industry. I'm quite certain that the industry gets over them, but they've got to ride through this tough patch right now.
Thank you. I think well out of time. I would again like to thank both of you for coming in this panel and sharing your thoughts with the participants. Thanks a lot. Thank you.
Thanks a lot for having us.
Thank you for having us. Yeah. Bye.